Joining us now is Ruchir Sharma, Rockefeller International Chairman. Ruchir, it's good to have you on a day like today where we did see, in general this week, we've seen the dollar weaken significantly against other major currencies. We've seen stocks here sell off. But as we just mentioned, we've seen rallies in other parts of the world. What's driving that? And how much of that is based on the policies of President Trump here that are actually pushing policy pivots in other parts of the world?
Right. To put this in context, as I had sort of spoken with you and written back in December, that we had this concept in American exceptionalism reach bubble-like proportions, which is that the performance of the American stock market had really gone parabolic. In fact, in my 30 years of looking at markets, I had never seen an instance when a country was this overowned, overhyped, and overvalued relative to the rest of the world. So that's what was the context of coming into this year. Now what we're seeing is that bubble is being pricked, which is that after having outperformed global markets for 15 years, the American stock market is beginning to give up some of that outperformance. The dollar, too, began this year as being the most overvalued on some measures since its floating rate history, which goes back to the early 1970s. So that's the context. Now, what's causing this bubble to prick? I think it's a combination of the fact that the American economy had been artificially juiced up by a lot of government spending, and also the fact that the rest of the world is beginning to get its act together, partly because of Trump. They are facing a sort of existential crisis because of the policies out of the US. And so they're finally carrying out the kind of reforms that they should have done anyway, from Germany to China. And that's what's lifting their market. So this is the big reversal that's going on here.
It's interesting because when you frame it like that, and I'll use Germany as an example with the fact that it's now positioning itself to spend more on defense, it sounds like you're going to start to see, or you're already starting to see, more fiscal spending from other countries while the U.S. is actually pulling back on that very thing.
Exactly. But it's also carrying out the kind of reforms. I mean, Germany would have not carried out these kind of reforms, which goes beyond defense. It's got to do with infrastructure, and hopefully it extends to the supply side as well of deregulation. They would have not done that had it not been for the urgency because of what the Trump administration has been doing with Europe. Similarly, in China, there's been a sea change in Xi Jinping's attitude towards the private sector. And that's also happening because he realizes that he needs the private sector to be firing, because the export economy is going to be under threat under a Trump era. In countries like India, too, they have the highest tariffs, as Trump has pointed out. So now India is rushing to lower its tariff rates and do a deal with the U.S. that it should have done anyway, to make itself more competitive. Okay. So I think that there are all these policy changes that are happening around the world.
So, Ruchir, what then are the implications for U.S. markets, even as they include a lot of companies that operate globally? I mean, if Germany indeed does crank up spending, at the same time Europe is relying less on America, perhaps, and even American products, if this China decoupling continues, partly driven perhaps by the U.S. Limiting the technology that's available to China to buy, if those reforms do indeed happen in other parts of the world, does the U.S. benefit as much or less than it would have previously?
Yeah, because so much capital got sucked into the U.S. If you just look at this decade, about $1.2 trillion flew into U.S. dedicated mutual funds, whereas hardly any money has gone into any global funds. So I think that there's ample scope for reallocation. So I think that the U.S. markets don't do well in this environment, and it's the international markets that outperform meaningfully. Remember, this is a 15-year record level of outperformance that we're coming into this. So I suspect that for the next few years, these other markets are going to do much better. And this gross overvaluation of the U.S. market, where the U.S. equity market came to be nearly 70% of the global stock market indices, compared to its economic weight of nearly 30%, I think that gap begins to close. So this is a seismic shift. It's just begun. And I suspect for the next few years, this is the story that we're going to be talking about, and it'll only become apparent with time.